All right, let's continue, of course, with these discussions about the interest rate. I'm now joined by Investec Chief Economist Annabel Bishop, of course, meant to take this discussion forward. Annabel, a very warm good morning to you. This is Tumelo speaking. If you can hear me, thank you so much for joining us. I mean, we're talking about interest rates hikes possibility today, and I suppose hearing from U.S. experts, what's the projection, what's the expectation? Good morning.
Yes, hi, thank you very much. We expect that we will see a flat interest rate outcome. We're not looking for a hike this time around. In fact, we actually saw the United States pause in their last monetary policy meeting in order to assess the impact of cumulative interest rate hikes on the economy. And we think there's scope for the South African Reserve Bank to do the same. Yesterday, we saw our CPI inflation rate regain target after many months of being out of target, over a year. And of course, as well, we also expect it to drop further down to the 4.5% midpoint this month in July when the data is released for August.
Yeah, let's talk about the impacts usually. And I mean, we have this question all the time, but I think, Annabel, is important for context and further just reminding our viewers why these interest rates either go up or down. What are the possible impacts for this decision by the South African Reserve Bank?
I think, to just take a step back, the South African Reserve Bank is seeking to try and control inflation in South Africa. That is why, obviously, we see higher interest rates. The same thing happens globally with other central banks around the world. With inflation falling back within target now and likely to hit the midpoint that the Reserve Bank aims for already this month, and with the Reserve Bank's inflation targeting framework forward-looking, and that means they're really looking to impact inflation in a year's time to 6 months' time. The 2024 outlook is very important, and the 2024 and 2025 outlook both show that South Africa's inflation is likely to average around 4.5%. So in a way, the South African Reserve Bank's job has been done. They've got inflation back within target. It's likely to be back within target in the forward-looking period that they focus on. The fourth quarter of this year, we'll see inflation rise a little bit towards the 5% mark because of some base effects. But that shouldn't be something that's overly concerning. The Reserve Bank should look through it. And of course, as well, South Africa likely to be ahead of the many advanced economies in its inflation targeting achievement.
Can consumers right now afford an interest rate hike? I mean, how cash strapped are consumers, Annabel, at this point?
No, you're right. There's a very high degree of consumer financial vulnerability. And that's what we were talking about at the start of this interview, that it would be very appropriate for the South African Reserve Bank to pause now and to obviously wait and see how the cumulative impact of its interest rate hikes, remember it started hiking in November 2021, are going to affect the economy. Because there's a lagged effect of interest rate hikes on the economy and on inflation. There's a 2 to 3 quarter lag. So already over the third quarter and even into the fourth quarter, there's already going to be some suppressing effect from interest rate hikes coming through, even without an interest rate move today.
Yeah. Annabel, perhaps give us some context, looking at the monetary, policy committee, making these decisions. 8.25%, that's the repo rate, the highest, in 14 years. But obviously it's been accumulating today. Just take us through perhaps the background to how we found the repo rate where it is right now.
Yes, look, the repo rate was at similar levels before the COVID-19 impact and the lockdowns. Obviously, we did see a very harsh impact on the economy from COVID-19 lockdown restrictions. There was a suppressing effect on inflation, and the repo rate actually dropped to 3.5%. So it was substantially lower in 2020 than it is now. And of course, we kept the repo rate low for quite a lengthy period of time. Globally as well, interest rates were cut. Of course, since then, over 2021 for South Africa, from November, but certainly, over 2022, interest rates were rising around the world, and that really has led to us now reaching this 8.25% for the repo rate in South Africa. Remember, prime is 3.5% above that. That's the margin. So we already find ourselves in a situation now. We've had quite a steep and quick upward interest rate hike trajectory. It's not something that's unusual in South Africa's history, but it is something that's unusual in the United States history, for example. The last time they had that was before the year 2000. And of course, that quick, rapid interest rate hike trajectory globally has had a negative impact on risk assets. That includes the rand, because it's emerging market currency, but of course, as well, equities were affected last year. All of that has really led to substantial rand depreciation as a consequence of the impact on commodity prices, on emerging markets, the risk impact, and rand depreciation is added to higher inflation. Now, of course, we've moved into an environment where the rand has come back somewhat. It's actually moved below 18 recently. There's, sure, quite a lot of volatility. But, of course, we do find ourselves where risks are starting to subside. And even in the United States, there's an expectation that the US interest rate hike cycle will end this year. And, in fact, next year, we could see interest rate cuts, both in South Africa and in the United States.
There could be some good news, of course, seeing those cuts. I can imagine food producers, the agricultural sector as well, Annabel, adding their voice, saying that they would not want to see an increase, but also consumers as well, who are already cash-strapped. I'm sure that's the kind of good news they want to hear. We'll have to wait and hear what the Reserve Bank has to say, but thank you so much to you, Chief Economist Annabel Bishop, for joining me right here on Newslink.